So in this video, I'm going to show you how to have $50,000 at the end of 5 years by doing something very simple that anyone can do, and that is investing your capital in just 2 safe ETFs, and you'll have at the end of 5 years 50,000. Now this is great if you're saving for something in 5 years and you need the money, whether it's to pay for some college tuition, or you're looking to buy a house or buy something that is down the road. This will help you generate income that you will not have to do anything except look at it in 5 years. In fact, I'd rather you open the account, put money in every month, and then don't look at it again until 5 years later. You'll be surprised at how much money you will have in 5 years. So if you're ready, let's get straight into it.
And also, please smash that like button and subscribe to the channel. Thank you very much.
The 2 funds we're going to use to achieve our 50,000 goal in 5 years is, the first one is the SPYG Portfolio S&P 500 Growth ETF, which is called SPYG. This fund tracks the S&P 500 Growth Index and has one of the lowest management fee. As you can see from here, is only 0.04%, which is great because anytime you get a high expense ratio on any ETF or mutual fund, I would say run the other way, because these fees will eat into your returns and make it really hard to beat the index. So this is a good fund that we're going to use to achieve that goal. And the second fund is called the Technology Select Sector Spider Fund, which is SLK. This is also a 23-year-old fund which has been running for a while, very popular. The expense ratio a little more expensive, it's 0.10%. Still not too bad. Anything under 0.10% to me is cheap. So this will invest in the Technology Select Sector Index, and it will track that index. Now let's see how the returns are for these 2 funds. So to track the returns of these 2 funds, I go to Yahoo Finance, type in SPYG, and go to performance. And you'll see that the performance for the 10-year right here is 0.23%, which is around 13%, and it does beat the benchmark, which is 9.48% right here. Sorry, my mouse is not going the way I wanted to go, but right here. All right, got it. Oh well, it's one of those days. Okay, so but don't expect the average to be always 13%. Okay, so this is a 10-year average. You might have some down years where it will affect it. As long as you get something close to 9% return, you will still achieve your goal of 50,000. All right, so let's take a look at XLK performance. XLK. Now SLK is going to be probably have a better performance because it does invest in the tech industry, and they generally have a greater return and also greater downside. But like I said again, as long as you buy consistently and buy when there's a downturn, even more so, you will not be that affected by this the downturns. And when it has the great returns on those great years, you're going to be really happy. So on the SLK, the 10-year, we see has a great return of 19.10%. So you're getting a great return on the SLK, which beat the average benchmark category of 8.68%. So this is a very good fund. If you're feeling aggressive, I do say put it in the tech funds, because anytime you have tech funds, it always beats in the long run, because technology is here to stay. It's only going to improve every year. I don't see it going backwards unless something seriously happens to the United States. So, technology fund is the way to go. If you like to achieve a little more returns, go for it. Now that we have two funds that we want to use so we can invest in, so we can have that $50,000 in 5 years, we can now go ahead to the investment return and growth calculator. This is what I'm using. This is from Smart Assets. They have a investment return and growth calculator. The reason I'm using this is because I like that they have some charts here. You can use any investment return calculator and you'll probably get the same results. We're just going to input some numbers here. So for the starting amount right here, I'm just going to put $100. So just say you start with $100. And what we want to do is invest at least $675 a month. Now, it might seem like a lot, but actually it's not that much if you think about it. $675 a month, you basically have to save, maybe just investing on a daily basis. All right, so $675 a month sounds like a lot to invest in, but it really is not, because if you break it down into a daily basis, it's much more manageable. So let's say $675 a month. Let me go to my calculator here. 675. Let's say there's 30 days in a month. Divide by 30 days. So you really have to put away $22.50 a day, all right, to have $675 a month to invest in, which I think is doable if you have a job. I'm not talking about if you're a student or anything like that, but yeah, if you have a job and you have an average amount of earnings, putting away $675 a month should be doable, because you just have to cut down on other expenses, like some Starbucks coffee or some other type of non-fixed amount of spends. So let's say we put $675 a month on here. We get a return. Now, I mentioned previously that SPYG was around 13% and XLK is around 19% for a 10-year average return. But I'm just going to be conservative. I'm going to put down 9% and give it 5 years to grow. So it's 5 years. And as you can see, if you did this for 5 years, at the end of the 5 years, you should have this amount, which is $51,068. Now, you might have more or you might have less depending on how the market behaves. But generally, if you invest consistently, I will see that you're going to get more than an average return of 9%. So there you have it. Simple and formula. You just have to put in the time, give it some money to grow. And if you look on the bottom here, this is the contribution you made in 5 years, $40,500, but yet you earn almost $10,468 in return. So in your stock portfolio return on SPYG or the SLK, you should be earning that amount. If the market does really well, let's say you invest in the SLK and you get that 20% return. Okay, in 5 years you will have $68,956. Okay, so look at the amount you contribute, $4,500, same amount, but yet your interest is almost $30,000. So that's how incredible compounding works with these stocks and ETFs. So, and let's say the SPYG, if you get the average of 13% for the last 10 years, you will still have $56,820. Not close to SLK as much, but still not bad. So still the same thing, 40,500 contribution, but you get 16,000 in total growth of your account. So that's the incredible part of investing consistently and also giving it some time so that it can grow your portfolio. So it's not that hard to become a millionaire if you look at how the regular folks did it. If you started young, you can see how much potential this formula has. All right, so let's say if you started young and you left it in the account. Let's say you started investing when you were like 25. All right, and now you're 50. So you gave it 25 years to grow. Average 13% of SPYG. Look how much money you will have. If you invested this amount, $675 a month, $1.5 million after 25 years. Look, that portion that you invested in, total contribution is 200,000, but the rest is growth, $1.3 million in growth. Incredible, isn't it? This is the only secret you need to know about investing in the market. Time and investing your capital in to a relatively safe ETF. Okay, I'm not talking about individual stocks, but into an ETF where you have some protection, diversification, and you will be all set by the time you retire. And this easy method of investing comes from my favorite person, Warren Buffett. He is the man when it comes to investing in the stock market. Believe in your stocks, believe as though you're investing in as a company, and keep it as long as you can. The compounding will do its work for you, and your money will just flow in by the time you're ready to use it.
Alright, so if you enjoyed this video, please do smash that like button, subscribe, and I hope to see you in the next video. Until next time, happy investing.